Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new week, the fag end of the month of January. So during this Asian session live market analysis and forecast webinar, which I'm giving it on 23rd of January between 5 and 5:30 GMT, I'll explain to you what is expected from now on in this market. And we would have seen that the other majors, they weakened initially during the early and the mid part of the month. And then subsequently last week, they started gaining the levels. And we could come across the continuation of the gains in them during this particular week. Then followed by that, we'll come across the monthly trend reversal moves. So in order to understand and plan our trades, we need to have three important components, namely the forecast and also the market reading technique, so that from time to time we can find out what the intention of the player is. Because we need to trade in line with the intentions of the players and not the market sentiments. If the players want to drop euro, then we should do sell and buy trade. If the players want to rise euro, then we need to do buy and sell trade. So we have to read it beforehand. For that, we have the market reading technique, and with the help of the initial lows and the highs, we just use some of the techniques what the players are using it in the market. And it is not the conventional technical analysis or fundamental analysis. Besides, if you fail to read correctly the market and read the intentions of the players, and somehow we got disturbed mentally, then we do a wrong analysis. In that case, the trade could go wrong. And in the event, if the market moves against the expectations and against the open position, we need to have a trading strategy to limit the risk and maximize the profit. So this is what we focus, so that consistently we should be in a position to earn money from the other market. So if you want more details pertaining to these things, you can always contact me through email, dr@i-knowindices.com, or my Skype chat ID, iknowindices@hotmail.com. With the help of that, you'll be able to communicate and get more information, whatever you are interested, or to know about your holding position, how exactly you can just trade with a holding or the pending positions. My website address is www.i-knowindices.com, and you can just go through there if you want to have further information. Now the three components, namely the derived forecast, the market reading, and the live market analysis, and finally the trading strategy. In this market reading, we use the market levels and also the time frame. So with the help of the time frame and also the session in which the market is making the move, we try to read the intentions using the live market quote page. So it is a simple market tracking technique we use. So if you learn how to use this live market quote page effectively, then you will find invariably your uncertainty will go away predominantly. So in the live market quote page, you come across the bid and the ask. The spread may be 1 pip or 2 pip, depends upon the platform providers. So you come across the variation in the spread that is between the bid and the ask, and that is referred as the spread. Then many people are of the opinion that if the spread is very much minimized, then that means it is a genuine platform provider. It is not at all. See, normally the banks are giving the spread in a determined fashion, so with which the platform providers have to play around. they try to improvise it by narrowing the spread between the bid and the ask. See, now in the case of yen, you come across both the bid and the ask are the same. And in the case of GBP, you come across there is a 2 pip difference between the bid and the ask. And euro also they are showing the same. And it is not the case actually. There is a spread between the bid and the ask, which is provided by that of the banks, which are providing the feed to that of the platform providers. What the platform providers do is either they manipulate it or try to give it in such a way in order to give the different impression to that of the traders. So when the spread bid and the ask are the same, as soon as this position is taken, it may not show any loss. But what they do is they make it as a variable spread. Whenever there is a quick activity happening in the market, the spread will increase from 1 pip to 5 pips or 7 pips. So when it becomes 7 pips and 5 pips, then automatically so much of usable free margin is being deducted from your free margin or deducted from the usable margin. So when they deduct it, automatically your margin will come down, and then it will give the fear for you to go in for a distressed trade. So just because they said that the spread between the bid and the ask is less, it doesn't mean that they are honest platform providers. So the platform providers, they don't have a mechanism to earn money from the other market. If they have their own capabilities and the skill set to earn money from that other market, they need not enter into that business of providing the platform and inducing the traders to take positions. And so when the trade platform providers who don't have a mechanism or methodology to earn consistently from that other market, so what they do is they want others to trade so that the risk is distributed to others and not to them. Whether you make a losing trade or a gaining trade, the platform providers earn money from that. So they want to earn consistently even 0.5 pips or 1 pip and things like that by narrowing the spread. And invariably what happens, in order to improve their income during that of the event release time or the data release time, when the spread between the bid and the ask becomes unimaginable, like 50 pips or 100 pips, immediately you find that platform providers hold, or the platform holds all your unfavorable positions and try to attract margin call. So this way they try to give enormous pressure to that of the traders to close the positions. At that time, if you try to contact any of the dealer, they will simply say that we are busy with other clients. And so invariably you find that platform providers are very, very friendly, and they are down to earth, and they are willing to bring the entire world to your feet at the time of opening an account. Once you open your account and deploy the fund into your account, immediately they try to monitor you. And if you make loss-making trades, then you find automatically you lose your account. So the platform providers do not bother about it. But if you consistently earn money from that other market, immediately they appoint a dealer, and the dealer will try to see that very frequently he provides the variable spread for your account. So if you have 2-3 accounts and open all of them simultaneously with the same platform providers and watch it in a live condition, you will find that the dealer is playing a trick with regard to the accounts wherein you are making more profit than that of the other accounts. So they bring in the variable spread and it will give the margin threat. So once that happens, then immediately you will try to close the position so that you are not under the risk of losing that account. So the platform providers actually try to earn money from their accounts, from their clients. So that is why you find initially they are very cordial and congenial. And later on, when you try to contact them, they say that they are very busy and so is not available and they are not willing and they may not allow you to freely withdraw the profit, etc. So this is the game. Now, earlier on, it was considered as a hidden agenda of the players. Now, when the traders have openly discussed all the information in public, in the networking, or in the open forum, then you find every trader is aware of it. So in such a situation, the platform providers are trying to find new methods and newer ways of attracting traders. Then in the process, you find they started offering the bonus, etc. Ultimately, when they come to that level of offering 100% bonus, the traders started questioning and suspect the way in which they are attracting the clients. So when somebody is depositing about $5,000, they are willing to give you $5,000. And initially, many people thought that, okay, this platform is good because they are giving 100% additional equity for us to trade. That they call it as a tradable margin, but you cannot withdraw the margin. What happens when you commit positions and when you see that instead of 5,000, when you see that $10,000 are available in your account, then immediately you find that you can take more positions when the market is moving against you. You think of averaging the position to earn money. And when you hold the positions for a few days, then immediately you find that margin comes down drastically after the deduction of the interest, variable spread, etc. In such a situation, the platform provider will say that you do not know how to trade, so we are withdrawing the free margin what I have given to you. Then immediately what happened? Your margin will become really dwindled. So you would have taken into consideration the calculation, the free margin what the platform has provided. But when they have withdrawn it, you hardly come across $100 or $150 left out as a free margin. And that will be very difficult to hold the positions when they are applying variable spread. Then you have to forcibly close the positions. If you don't close, they will apply the margin call and close the positions. So this is nothing but a educated way of stealing the money from the traders. And predominantly you find still the platform providers are giving various assurances and telling as if they are the best platform in the world, and they are displaying so many awards of their own, and they simply display it in the web that they are highly regulated by so many other agencies, etc. But when it comes to that of handling the client, initially they are very, very cordial to that of the client. And then subsequently, you find that they show the true color. So that is why you find there are a lot of restrictions in various countries going for the Forex trading. It is not that the Forex trading is dangerous, etc. Forex trading is really good and people will be able to really earn very nice money. But unfortunately, the greedy players and the greedy platform providers, they see that that account is closed because the platform providers cannot earn money from the other market on their own. They can only earn money by playing some foul game with it of their clients. And you find that predominant of the platform providers, when you ask them how many clients are there, they will simply say that 5,000, 10,000, 20,000, etc. But when you come to reality, when you cross-check with regard to their volume or with regard to the usage of clients, their websites, etc., they are far away from their top 100 websites. So, which clearly indicates that the platform providers are telling all the time lie and give false promises and trying to attract the funds from that of the traders. don't think that I am against the platform providers. The platform providers, initially they think that they wanted to be honest, but they increase the overheads. And finally, what happens when they increase the overheads, they are not able to meet such overheads with the meager money what they are earning as the PIP commission from that of the accounts which are opened with them. So they wanted to earn money substantially in order to meet their expenses. So in that process, they are forced to indulge in such activities. So let us not bother about the platform providers, but we need to bother about our trading account. So where exactly we can open our trading account? And for that, my simple suggestion will be you open trading account with any platform provider, but don't hold it for a long time. Once you hold it for a long time, it automatically they have got a software which indicate to them that this account the people are making money. Immediately they will appoint a dealer to handle it. So instead, you just trade for a month or so and then switch it over to that of another platform. Or you try to open that account, trading account with the banks and their regularized bank so that you will not be really affected much because that such banks should be participating in the interbank treasury activities, and such banks will be able to give you a spread of a wider nature, and also they will charge you for holding their account, but they will not charge on a daily basis. And they may sometimes say that you have to call the deal room and place your orders, etc. But that is good, and thereby they are not willing to misappropriate your account. But only thing is, the dealers sometimes will start giving you advice. They are also human. So when they see that euro is really making a fall, then when you want to buy, the dealer will say that don't buy because everybody says that the euro could fall further down. So you think that it is not appropriate to take a buy. But afterwards, when you ask the dealer, see, you could have allowed me to take a buy, but euro has gone up, and you will say, no, at that time, there are huge selling coming in. That is why I said subsequently you would have taken a buy. So he will also try to give you an excuse for that. So here, when the people are under the influence of fear and the grip of fear, then they are forced to give wrong advices. So that is why I always say that, first of all, the analyst or the dealer gets afraid. Then subsequently, like a virus is spread, or they spread such fear to other traders also. And invariably, when they spread it, that becomes an advantage for that of the players to earn substantial money from that of the traders. Now, what happened? The second aspect of the Forex trading, namely the volume building. So normally what happens, the trading accounts people will open during the early part of the year, thinking that they will be able to earn money substantially because of various commitments. So normally you find the account opening process will be very active during the month of January, February, March. And in that process, what happens? The players, or I mean, the platform providers offer many attractions, bonuses, etc. But don't be carried away by that. And you try to find the genuinity of the platform providers, and you have to have your own experience. Only then you will be able to really discriminate the platform providers. And see, what you see in a demo trading platform might become totally different when you come to the live trading platform. These are all some of the hitches that new beginners or the traders need to understand. Because what happens, Normally, if a person loses the money, he simply keep quiet and open another account. He does not talk about it in an open forum. But when he has earned about $100 or $200 or $5,000 in single trade, he will simply tell in a forum in a big way that he has made a fantastic trade. So this is the normal tendency of every trader. So the newcomers, when they are not aware of such risk associated with the platform providers, they also undergo a hard way of learning such bad experiences. So that is why I'm just cautioning all the traders here during that of the year beginning that try to choose the right type of trading platform and always have an experience with a small money to start with. Deposit about $500 or $1,000. It might be insignificant for the platform providers. They may not be giving so much of attention to your account. Don't open with a big money. Then immediately it attracts the platform providers to monitor your account. Then afterwards experience how the variable spread, etc. they are applying to your account, and also misquote, etc. So recode. There are various aspects in the platform providers, and even the platform developers have given such facility to that of the platform providers so that they can manually interfere in your trades, even though they simply say that your trade is directly going to that of the bank. They can simply misquote, or they can just recode the levels, and they can simply say that the market has already moved away from your orders, etc. So feel how exactly the platform provider is, and they may simply put the blame on your internet connectivity and say that your internet is slow and the market is moving in a very fast way. But don't be carried away by this, because the platforms are developed in such a way, even if the internet speed is very low, still the platforms are expected to work well. And so whatever the excuses they give, do not think that that is true, and always try to judge by yourself using your common sense and then select the trading platform. Then don't keep your account in a single trading platform for a longer period, and that attracts once you earn money from them. And I hear from many of the traders, I never earned money from that other market, because of late many of the traders contact me saying that I'm not made any profit from that other market. Will you be able to help me? So I thought that I should talk about the platform providers, even though I am giving you the forecast and also giving reduce your uncertainty. The platform providers are manipulating your account and trying to earn money from you, and also try to close your account once you have earned nicely profit in your trading account. And other platform providers, when you earn more money, when you want to withdraw, they don't allow you to withdraw. They want you to commit more positions. They also say that we will deposit matching money to your account. So try to trade it in a big way, because you are able to earn substantial money. Once the margin is improved, then definitely you will be able to take more positions and earn more money from that. It is not logarithmic proportions. As the equity is big, it doesn't mean our earning has to be big. It is not correlated, because once the equity is big, when the market moves against, then it will force us to close many of the account, many of the open positions. So it is not that when the equity is big, if you take more positions, you will be able to earn bigger profit. So don't correlate it that way. It might have a negative impact on that. Then coming to the forecast part of it. So this week, the final week of the month of January, the yearly trend reversal is expected to get over during this process, during this week. And I would have seen, as you would have seen last week, they started gaining the levels in the case of euro and GBP. And now many of the analysts were expecting the new president take over, and that might have, because he has got different ideas from that of the previous president. So the market might show a phenomenal US dollar gaining move. So that is how they are given the impression to that of the traders. But actually, who is going to say no to money? So you will come across that market is expected to gain the levels. Other majors are expected to gain the levels during this week. And next week, you will come across the monthly trend reversal volatile moves. So monthly trend reversal volatile moves will start from that of next week. Till such time, we will come across the yearly trend reversal. And this yearly trend reversal, they made extreme downward move and extreme upward move. They are expected to show during last week and this week. So make a note of the session-wise forecast and try to do the trades within the sessions so that you will be able to nicely earn money from that other market. Otherwise, they are expected to gain the levels for 2 days, Monday and Tuesday, and then they are expected to make the slide and drop the market, and then again they are expected to firm up the market. From that Wednesday and Thursday, they are expected to drop and then gain again on Friday. So watch that carefully, and then you try to take positions accordingly so that you can maximize the profit. Now coming to the levels in which the currencies are expected to swing this week. Euro could swing from that 1.0625 to 1.1050 area. They've gone up to 1.0750 and holding around, and the low they have formed today is 1.0695. GBP again last week you have seen that it came below that of 1.20, and then they started gaining the level to 1.24, and again they are expected to swing here and make some extended downward stop into 1.22 area, started gaining aggressively later on. So you have to keep in mind they will do the downward stopping in GBP followed by the downward stopping in the case of Euro. Both will not show simultaneously. Similarly, USD is expected to show the US dollar weakening move to drop on the downside, as well as US dollar gaining more by making an upward move. And at times you might come across, they might drop along with it of Euro and GBP, rise along with it of Euro and GBP. In that case, that means the players are handling the crosses heavily, yen crosses heavily. When the traders commit more positions in the case of crosses because of uncertainty with regard to the majors. In the case of yen, they came down to 113.45 and they could touch 113 and then start gaining the levels again. So carefully watch and trade. Last week they came down to 112 area and then started gaining the levels to 115. Again they have come down in order to, they just gain the level and book profit and drop again, and then continue to make one-sided move on the upside or on the downside. So we have to be in line with it of the one-sided move. Then your trades will be making maximum profit. In the case of CHF, they have come below that of the parity, so came down to 0.99 area. So the high could be 1.02 and they just gain the level to 1.0027 and come down, and they are expected to make either way moves and also at times move the gain levels in the case of USD CHF along with that of Euro in order to gain the levels in the case of Euro CHF cross as well. And always keep in mind they will do the sequential trend reversal moves, and we have to follow the sequence and then trade accordingly. Then in the case of Canadian dollar, they are expected to come down from that 1.33 area, and they already started coming down from the 1.33, went up to 1.3388 and started coming down. and so they could come down to 1.31 area. And Australian dollar, they could form the low as 0.7550, start gaining the level to 77. Coming to the market reading, euro formed the low 1.0695 and the high was 750. They are not breached the low or the high. In the case of GBP also, they are not breached the low or the high. And also in the case of yen, they are not breached the low or the high. In CHF also, they are not breached the low or the high, or they are set around 3:30 GMT. In Canadian dollar, the low and the high are not being breached. Australian dollar, they are not breached the low or the high. So in all the currencies, what they are set as the initial lows and the highs, they are not breached it, indicating they are expecting the traders to commit the positions by developing the bullish and the bearish field, and later on they are expected to make the whipsaw moves. So the recommended trade around that of the buy when they make a brief downward stop, and during the gap time or the early part of the European session, you can take a buy, and then subsequently they are expected to gain the levels. And in the case of GBP also, closer to that of the low, you can take a buy, limit order, and keep the exit order, and the hedge order to limit the risk. Once the position makes profit, remove the hedge order and keep stop at entry, and then trail the stop, maintaining 15 pips away from the other market. And also you can make the take profit order as a trailing order, so that the market will be between that of the trailing stop and the trailing take profit order, so that it can hit anyone and your profit will be protected. Then again you can next session think of another trade. That way if you try to do it, you will be able to really consistently earn money from that other market. And once you become addicted to trading, what happens once you close the position, within 5 minutes you wanted to commit another position, and there comes that risk of loss making in trades. Always give minimum of 30 minutes gap between the trades. So these are all the session timings, and you can note down the session timings. And early and the late session they handle the majors, mid sessions they handle the crosses. So I'll answer to the questions which are asked. Okay. Which session does the US dollar gaining or the weakening move occur in most times, and how long does the move usually last? See, US dollar weakening and the gaining move, they try to do it most of the sessions. So we cannot identify, or we cannot simply say that only this session they make the US dollar gaining or the US dollar weakening, etc. But during the early part of the session, suppose they are going to make a rise during the late session. During the early part of the session, they will set the low by making the US dollar weakening, US dollar gaining move. Similarly, when there is a swing and slide, then they will set the high during the early part of the session and close it near that of the low or breach the low during the late session. That way, the swing near that of the high or near that of the low, you have to find out with the help of the forecast sheet. So here, swing and rise means swing is near the low and then they will rise. And swing and slide means the swing is near the high and then they will slide. So that way you have to watch it. Then normally they hold, it depends upon the type of move. If the US dollar gaining or the weakening move is very quick, then it might be a stop and or a intentional or the extended move. So that means 30 minutes to 2 hours. If it is an intentional move, a slow US dollar gaining move, it could be for 2 sessions and the start of the 3rd session. So the type of move will indicate whether how long that move is going to be. Also, when the data release happens in Europe and the US, do they make opposite moves or can they both go in the same direction? There is no hard and fast rule that for the data release, they have to make the moves in tandem with that of the data. For example, everybody was expecting how to trade Trump on 20th. And everybody was telling that when Trump is hawkish or dovish and things like that, the market we have to take positions differently, etc. But ultimately, what they have done, they simply gained the levels in the case of Euro and GBP. And then everybody said that they are simply discounted. Then when they are capable of making the moves in line with that of the expectations or against, where is the question of deriving what the move they are going to make it? So depending upon the traders' pending positions, they are expected to make the move. If the traders have predominantly taken long position, then even the data is going to be detrimental. They will simply drop simply drop Euro and GBP. Suppose traders have predominantly taken long position in Euro and the data in US is so weak, then everybody will expect that Euro to go up. But the players are not going to rise. Because if they rise, all those who have taken long positions will make profit. They don't have any philanthropic ideas of giving money to that of the traders. And they wanted to earn money from that of the traders. They will simply drop Euro, telling that the news is already discounted or there is a risk aversion. Once they say that, Euro, they just simply, without supporting it, they start selling it, then automatically everybody started selling it. Then Euro make a drop of 50 pips, and that will trigger the fear to that of the traders to cut the long positions. So when predominant of the traders have cut the long positions and turned short, then nothing would have happened in the market. Slowly they will gain back the levels in the case of Euro. There won't be any trigger in the market, but still they gain the levels because predominant of the traders have turned short in order to earn back the lost money. So with the help of the money power, the players create the market sentiment and act against it of the traders from time to time. And all the data release, technical analysis, everything is nothing but an excuse. Market will appear following technicals and suddenly it will reverse, and the analyst will say because of the fundamental, the market has just gone crazy. What do you do with that? So ultimately you have to understand the players don't have any select program to make the moves in the market. So in order to understand what they are expected to do it, I had done it in an algorithmic study. So based on that, I'm just trying to give you that forecast that they are expected to rise Euro and GBP, they are expected to slide Euro and GBP, etc. This is an indirect method of studying their sentiments. So I'm talking to you regarding the market sentiment, the sentiment created by that of the players. But my focus studies the intentions of the players. So how they are going to behave on Wednesday, how they are going to behave on Thursday. That is how the forecast is being prepared. Okay. There is a straight question from Brian. Can you explain how to enter a trade in Asia early after an intentional move happened the previous day? Okay. When the intentional move happened on the previous day on the upward, Euro and GBP gained the levels, what the players will do, they will just gain further levels in the case of Euro as an extended move. After the intentional move, they will make extended move. Then again intentional move. So extended move will be on the downside. How they will do it? Hold high Euro and GBP near that of the high, set for the day to start with as an initial high, and they hold around that without breaching it. Without breaching the new high for more than 30 minutes, it is an extended move, and holding near that of the high, what they will do after the extended move, they will make a downward move as an intentional move. Then that will create this opposite sentiment. So keep in mind that we have to track the type of moves they are doing it, then we will be able to really do well. And for your understanding, I am giving the gross forecast. So this gross forecast, you have to fine tune it with the help of the market reading. They set the initial lows and the highs, and they are not breached the high, they are not breached the low, but they are holding near that of the high. Then they are expected to make a rise towards close. Then afterwards a swing. Then what will happen? They will make a brief upward stop if needed to hit the stops before making a slide. Or they may simply make a false move up to that of the high. They may go up to that of 1.0750 without breaching it and quickly make a drop during that of the gap time. And during the European session, they are expected to firm up. So a gap time move will be a false move. So they will make a dip before making a rise. So once they make a dip during that of the gap time, they will make the swings near that of the low and make a brief downward stop and if needed, and then firm up to that of the middle level. Then they will try to swing and rise above that of the high as an intentional move for 2 sessions. So when you have to take a buy, once they come closer to low, you try to take a buy. That is what I recommended as a trade, recommended trade. If you follow the time frame, you can follow the time and swing and rise during the early part of the Japanese session when they are closer to low and stop cutting the new low for 30 minutes, take a buy and quickly book profit during the rise, and again take a sell during that brief upward stop or a false move near that of the high, then quickly book profit during the gap time. Then afterwards they will make a lower level swing, you try to take a buy and slowly they will firm up. Again during the gap time they will swing, but you keep stop at entry so that you don't incur any loss. In the event if they go form their new low, you will be stopped out, and the new low you can take a buy. Then afterwards they will rise, you can book profit. That's how you have to plan your trades. Then what's your forecast for gold and oil? Gold and oil are also expected to gain the level slowly. And sometimes what the players do is they just make the moves in the case of the majors, or sometimes they make the moves in the case of the commodity pairs. So now they are just accumulating the positions in the case of commodity pairs, and they are just already accumulated during the year beginning the positions in the case of majors and the stocks. They will gain the levels in the case of majors and the stocks, and then subsequently they will gain the levels in the case of commodity pairs. And then the commodity, because of the thin volume, it will outbeat the majors, start gaining more levels, and then at that time, after creating the bullish field, the players will try to offload, book profit, their buy positions in the case of Forex, and then make a small dip and then continue to rise. So always keep in mind they create a bullish field and book profit, and they create the bearish field and take new buy positions from that of the traders. No more questions. So near the low, you try to take a buy, you will be able to really see some nice profit during the day. So I'll come back on Friday, 27th, and review the forecast, what I have given it today, and so that you will be able to really understand how forecast is able to guide you and reduce your uncertainty. So I take this opportunity, thank FX Trade for the facilities provided, and thank you all for your patient listening, understanding the hidden agenda of the players as well as the platform providers, and try to avoid becoming victim of such acts of them, because they are making the money making process, but at the time you should not be caught unaware in their act. Wish you all the best in your trades. Trade wisely.